right. Meantime, Boeing dropping 3% on reports that the Justice Department opened a criminal investigation to January's mid-air blowout. Also today, roughly 50 passengers aboard a Boeing plane were injured following a strong movement mid-flight, the latest in a string of operational issues involving Boeing jets. The stock is now down 26% this year. For more on all of this, we're joined by Stifel Aerospace Analyst Bert Subin. Bert, great to have you with us. How do you look at, in terms of this new criminal probe, how do you look at the worst case scenario in terms of the financial costs of Boeing and how long it takes to get resolved?
Yeah, I mean, I think if you look at, what happened in 2021, which was a $2.5 billion total settlement, which was broken down really as $1.7 billion to customers and then about $600 million or $500 million to the families of victims from the Max 8 crashes, and then about $244 million in criminal penalties. And so, what's it going to be this time? Hard to handicap. But the stock was down over 3%, as you mentioned, and that would indicate, about a $4 billion move in market cap. And we don't think the net present value of any potential criminal penalty would be that high. So I think what people are really looking at is, what does this do to production? There's obviously been a lot of negative headlines on the Boeing side recently. Everyone's been focused on this 38 Maxes per month number, which is where they're actually restricted to right now by the FAA. So I think is really what's happening is, you're looking at what happened to some of the United aircraft last week. You're looking at FAA comments and Transportation Secretary comments, and it's just sort of piling up to a degree to where I think people are pushing out production expectations more so than the criminal penalty being what's weighing on it.
The 2021 agreement that you referred to is a deferred prosecution agreement, in which case, in the amount of time, they have to sort of be in good behavior. If this falls into the category of violating that period, are they then back on the hook for more criminal prosecutions relating to fatal crashes?
I don't think so. I think this will be, centered around the Max 9. And interestingly, that DPA was set to expire 2 days after this accident happened. So it was unfortunate timing for Boeing. But, I think, one, this is going to take a period of time to actually be resolved. So I wouldn't look for anything sort of in the near term. And then two, it's going to be, increasingly difficult from Boeing's perspective, from our perspective, to actually handicap, how much money they could ultimately owe under criminal penalties, if there are criminal penalties.
So, Bert, we're approaching the October lows. Boeing's a company to do $22 billion in a quarter-ish, half of which is commercial air. I get it. But, we talk about this a lot on this desk. Defense is another $7 billion of that. Then they have a global services and support rounds the entire thing out. At these levels, and given the backlog they have, it seems as if you're getting a lot of this company, not for free, but at a significant discount. Can you speak to that?
Yeah, I think you're spot on. We look at the market structure, and the reality is there's two aircraft producers. There's Boeing and Airbus, and there's Comac, but still a ways away from sort of seeing that have true penetration in this market. And so what you're seeing is Boeing is not really losing orders. Their backlog after the fourth quarter was the highest it's ever been. And then American placed a pretty tremendous order for Max 10s last week. And so if you're adding that together, you've got an all-time high backlog, and people are essentially factoring in a risk premium for sort of what could happen next. And I think every day that goes by where something significant does not happen, that'll start to erode. And the way we actually value the company is on a enterprise value to backlog basis, historically around 40 to 40. On that, right now, sub 33%.
Hey, Bert, it's Tim. So I agree with that. I'm long Boeing. It's been a frustrating roller coaster, really, because after a 50% move off that market inflection, we're right back there. But what do you do as an analyst in terms of discount rate? You're not necessarily doing this on DCF, but there are dynamics with the stock that certainly affect the multiple. And how would you assess that approach right now versus where we were 1 year ago for you?
Yeah, that's a good question. I think it's very difficult to do a DCF in Boeing, and we don't, really look at it that way. We look at it either on a, an EV to backlog basis or, on a free cash flow multiple basis. Management stood by their target of getting to $10 billion of free cash in the 25 to 6 timeframe. My view is that's probably moving to 26 sort of plus. And I think that's where the market is. But if you look at a company that even in a year as tough as the one we're going through is going to do something near $5 billion of free cash, And then once we start to see production normalize, which, is months, a couple quarters away sort of from starting, you should start to see that discount rate that's ultimately baked into it go down. But yeah, it's certainly gone up, and that's been part of it, not just rates going up, but, the risk around Boeing going up. But if you look at their prospects and the market structure and their orders, there's certainly a lot of value to extract if you believe some of these near-term headwinds start to fade.